Joining me today to discuss the week ahead for financial markets is Paul Bloxham, Chief Economist for Australia and New Zealand at HSBC in Sydney. So Paul, what will you be keeping a close eye on next week, and likewise, what would you advise investors to watch out for in terms of events and data releases which could rock the financial markets next week?
Well, there are a number of things to watch out for next week. I think early in the week we're going to see Japanese GDP, but we're also going to see from Asia, in all likelihood, we may see a Chinese response in terms of having weaker trade data in the previous week. They may respond with policy moves as well. On the Japanese GDP numbers, we expect to see solid growth in terms of that release. If we're looking a bit further forward into the week, around midweek we get the European numbers, the European GDP numbers, and we're expecting a contraction of 0.4% in European GDP. A key thing to look out for will be what's going on in the core countries versus what's going on in the peripheral countries. We know we've seen signs in the PMIs of weakness in the core countries, and we'll be looking for signs that that's reflected, or whether that will be reflected in the GDP outcomes for those core countries. There's not a great deal later in the week, but I think one of the things that will be of interest is the US initial jobless claims numbers, because in the previous week they'd actually improved a bit, and it's showing some signs that the labour market may be stabilising in the US.
As you just mentioned, we have an array of Eurozone data being released next week, including important growth figures from both Germany and France, as well as the Eurozone as a whole. Firstly, how do you think economic sentiment is holding up in Germany? And do you think Germany can still manage to power the rest of the Eurozone through the crisis while still maintaining a moderate level of growth?
Well, we certainly think that that's going to happen in the medium term, but just looking at the short run, it does look as though sentiment has turned down in Germany. Certainly the PMI indicators and the new orders indicators suggest that Germany has had a hit from what's been happening in terms of financial developments recently. I think we're a bit more optimistic if we're looking into the second half and into next year in terms of Germany's performance. Of course, it's got the benefit of the euro being fairly weak and interest rates being fairly low, and of course its financial system still works in large part, so that will be providing support for the German economy.
What about the Eurozone as a whole? What do you think will be driving the euro movement and dominating European headlines in the coming week?
Oh, it's certainly going to be financial developments focused on Spain, Greece, and indeed also on Italy in terms of announcements by officials, and as it seems to be continually the rumours that are associated with the sorts of developments we're likely to see from policymakers in the future.
I know your speciality lies with the Antipodean currencies, New Zealand and Australia. So how are both of these economies faring at the moment, judging from some of the data that's been coming out from both of these countries as of late, and both the RBA's and the RBNZ's current stance on monetary policy?
Well, the Australian economy is in pretty good shape. We know the unemployment rate is at 5.2%, which is pretty close to full employment, and that's been the case right up until July. We know inflation is fairly low, and we have also heard this week from the Reserve Bank of Australia, and they seem fairly upbeat about things. Of course, Australia is getting support from the mining investment boom, which is still continuing to support growth, and the fact that interest rates have come down a bit is also supporting some sectors of the economy. The New Zealand economy is not nearly as in a stronger shape as that, but it's fair to say it's doing okay when you compare it to the rest of the developed world. The New Zealand economy is expected to get a bit of support in the second half of this year from the rebuild of the Canterbury region. That rebuild is expected to provide a key support for growth this year overall and into next year.
What about China and other Asian economies? Is Chinese economic data showing the signs of stabilisation you would hope for?
Well, on the trade side, things are slowing in China, and they've slowed a bit more sharply than was expected in the face of the European developments. In terms of the domestic economy, things have been easing, but in large part the easing has been in line with what was expected. What we do expect to see, though, is the fact that the Chinese economy has slowed down to below trend, and inflation is now low, should allow policymakers room to be able to provide support for growth, and indeed that's exactly what we expect to happen. We expect to see them cutting rates further and cutting their reserve requirement ratio further in the second half of this year to provide support for growth.
The Bank of England's inflation report highlighted a very downbeat outlook for the UK economy. Looking at various sectors of the economy, what has been the main cause of this growth shortfall? And also, how can the UK pull itself out of its recession as its easy monetary stance has failed to prevent this?
Well, the UK faces some enormous challenges. It faces fiscal headwinds because of the government's approach to winding back the fiscal deficit more quickly and their fiscal austerity measures that have been put in place. And of course, it also faces the fact that their major trading partner is Europe, and Europe is in the doldrums, and it looks as though Europe's condition will be weak for quite some time yet. So that does present a very challenging environment for managing the UK economy. And as you pointed out, monetary policy has also looks as though it's coming to the end of its ability to provide further support. You've seen quantitative easing, which has now meant that by November the Bank of England will hold about 75% of all gilts on issue, and so it does look as though things are fairly weak, and there are a limited set of policy tools available left for policymakers to be able to provide support.
Finally, Paul, just to end with the US, we've had quite a mixed bag in terms of data out of the US, although we did recently have quite an upbeat jobs report. Where to from here in terms of data expectations?
Well, we expect the US economy to continue to grow, but we expect it to grow at only a modest pace. We have in mind that growth this year will only be around about 2%, which is well below previous estimates of trend growth. And indeed, we're expecting similar growth to continue into next year. One of the key things that they face, of course, is the fiscal cliff, and it will be a key question, and it's a key uncertainty right now as to how much that will actually occur and how much it will put downward pressure on growth.
I'm afraid that's all we have time for, Paul, but thank you very much for sharing your insight into the financial market for the week ahead. Make sure you join us next week, viewers, when a fresh trading week will, as always, bring fresh financial news. But for the moment, have a great weekend and goodbye.